Hello, ladies and gentlemen. This is Jesse Colombo, Cyber Trading University's Forex and Futures instructor. And we have an interesting closing bell today at 4:30 p.m. Eastern Time with Jeff Gibby of MetaStock. But before then, I'm going to be doing my daily Forex and Futures update as I normally do in the Cyber group. And today I'm doing it in this room as I normally do now in the closing bells just to open up. So my typical starting point is just looking right at one of the most common futures contracts out there, which is S&P 500 futures. And for those of you who have been following what I've been saying for the last few weeks, actually over a month now, I've been showing how there was going to be a likely breakout and rally, or at least a directional move from this pattern. I'm going to draw it for you right now. Just showed how there was a triangle or a wedge, and I was watching for the breakout, and we have a continuation of this breakout. This rally keeps heading up, and this is something that I discussed on January 27th in my Forbes column. I showed these patterns right here, showed how triangles were forming, so you can't say this stuff is not predictable. So this rally continues for another day. It keeps following up that rising up trend line that I've been showing. So I just want to keep on seeing if it's going to keep following up. And I would not be going in long right now just because I believe it's a little bit too late until there's some sort of consolidation if you're looking to get in. But the time to get in was right around early February, immediately after this breakout occurred. But there's a good chance that this rally will continue and maybe even make a move of a similar magnitude as we saw this past fall. So that's what I'm watching for. Now on to the Dow. You can see similar pattern, broke out of that wedge. We got a solid breakout above that key psychological level at 18,000. And continuation of this rally after Janet Yellen's comments today, basically allaying some of the market's fears of an excessively aggressive rate hike schedule. She was indicating that she's going to remove drop the word patient from their forward guidance at some point, possibly in the next Fed policy statement on March 17th and 18th. But at the same time, she also took a bit of a dovish tone as she was suggesting that the Fed was not in a hurry to raise rates very, very rapidly. So definitely the market was pleased with those comments and certainly didn't derail this rally. So I just want to see if there's going to continue and keep following that rising up trend line all the way up. On to the Nikkei, which is Japan's stock index. This is another one I discussed in that column I just showed. It's really taking off at this point. This is very interesting action, but not exactly surprising either. Broke out of that wedge, and you can see it right there. It's following it up, so that's a nice healthy trend at this point. And I was also showing how 18,000, which also coincides with the December high. I wanted to see if it was going to break above those two levels, which did happen over the, I believe it was last week. Yeah, it was definitely last week. So that was a nice confirmation on the upside. So hopefully some of you caught it because I was discussing it before it happened. Could have played it many different ways using futures or the EWJ ETF if you're a stock trader only, or you can play it with options. Lots of different ways of going about it. And the US NASDAQ 100, nice solid rally after breaking out of this pattern, just like the other indices. Just watch that rising up trend line. That's pretty much the main reference point I'm looking at right now. If it dropped below there, I certainly wouldn't want to be long, but right now it just seems like it's following along, maybe even in some sort of a channel. So on to Forex. Nothing has really changed in the past several weeks with the US dollar index. This is my common starting point when looking at Forex. We're just not seeing a breakout yet from this consolidation, but I believe when it does, it's going to move big and could definitely provide some interesting forex trading opportunities. So just keep your eyes on the US dollar index, because that's going to determine what the other currencies end up doing as well, because they are consolidating as well, as I'm going to show you shortly. And for those of you who are not aware, there's an inverse relationship between the US dollar index and the US dollar, obviously, and non-US currencies. For example, the euro versus US dollar currency pair, you can see almost the diametrically opposite pattern to the dollar index. And you can see this almost looks like a triangle type of consolidation that I've been showing for a while. So I just want to see if it's going to break out or break down. So we really just don't know, and most likely some sort of a resolution, a positive one or a negative one, with the Greece situation, and also as more information comes in about the upcoming Fed rate hikes, that's likely going to affect these currencies right now and possibly cause them to break out of this consolidation. So I think a big move is probably ahead. Let's look at the dollar yen. Same thing. Really not seeing much of a move, but I've been showing this triangle. I'm watching this, and if the dollar yen has a real follow through, I'd like to see a breakout above this high that was reached back in early February, and also the highs back in late December. They seem like they're right around the same level, so I'd like to see a break above there as further confirmation. It's around 121 on the dollar yen currency pair, so I just want to see if that's going to, if it's going to breach that resistance and then keep on heading up from there. And that would certainly boost Japan's Nikkei stock index that I was showing before. So we were seeing a very, very strong rally, and weakness in the yen tends to help rallies in the Nikkei stock index because it boosts exporters. Exporters in Japan benefit from a weak yen in general. This is the pound US dollar. I'm just going to show you the weekly chart. And showing this, there was a breakout earlier this month. And back to the daily. I'm still watching it as it's following this likely channel. So I just want to see how this is going to resolve, whether it's going to keep rallying from here or if it's going to bump its head at 1.55 to the US dollar, which is a major psychological level just because it's a round number, but also it marked the lows in late December. So I just want to see if it's going to either bump its head and fall and break below this channel, or if it's going to follow through and break above, and then I would say a continuation of the rally becomes likely once it's above that level. If it breaks, if it bumps its head here at 1.55 and breaks below this channel, the lower rising uptrend line of this, I wouldn't be surprised to see it correct and at least try to retest its lows that it reached back in late January of around 1.5 to the US dollar. So it's possible it could form a W bottom or a double bottom or even a triple bottom. That's very common to see a retest of lows. So I don't know which way it's going to head, but we'll just see when it finally either breaks to the upside or to the downside. So just keep on watching that. Looking at the Australian dollar versus US dollar, same pattern. It's consolidating. I think it's definitely winding up for some sort of a directional move soon, so it could be an opportunity for traders. I'm watching this downtrend line, which is acting as an overhead resistance. So just watch out for a breakout or breakdown either way. And the direction the US dollar index heads from its consolidation is likely going to determine which way the Australian dollar, US dollar pair heads as well. So if there's an upside breakout in the US dollar index, there should be a downside breakdown on the Australian dollar, US dollar currency pair, and vice versa. So just keep watching that. Let's look at the Canadian dollar. This is the US dollar, Canadian dollar currency pair. And this particular consolidation looks like a wedge or a triangle. It's definitely quite clear on this chart. So you can see today it bumped its head right here at the resistance and may try to retest down here at the support and may bounce around for another few days, maybe a couple weeks, and then I want to see if there's going to be a solid follow-through. Maybe it'll break out to the upside or even to the downside. So a lot of it has to do with, obviously, the way the U.S. dollar index moves, but also the direction that oil's heading. So that's going to bring up this next chart. I'm going to show you what I'm watching in oil. This is West Texas Intermediate crude oil, the U.S. benchmark. It's down again slightly today. It's just above $49 per barrel, which is underneath 50, which is a major psychological level. So I just want to see if it's going to try to correct back down to 44, which is the lows that were reached in throughout January. So for now, just watch and see which way this is heading, and that'll definitely influence the Canadian dollar to some degree. On to the New Zealand dollar, U.S. dollar currency pair. Now we're seeing some interesting action, because this goes back to something I've been saying for the past few weeks. And just to summarize, I was watching this consolidation pattern that formed this past fall, and there was a breakdown in January, and I was looking for opportunities for people who were, let's say if they missed that breakdown, an opportunity for them to possibly get back into it or get into it in the first place. And I was saying that I was watching if the 0.76 to the U.S. dollar level was going to be a psychological resistance, if it's going to bump its head, just because it's a major round number and it marked the lows back on December 8th and January 4th. So sure enough, it's acting like somewhat of a resistance, and it retested its breakdown point, or at least this zone right over here. So now I want to see if there's going to be a further confirmation to the downside. I don't know how it's going to head. I don't have to, but I'm watching this channel. So I want to see if it can break below this channel, then that would definitely be a bearish sign. On the other hand, if it bounces and finds support at this rising up trend line, it may try to rally back up to the top of that resistance right here. So, and I want to see if it can clear 0.76. So just keep on watching that channel if you're trading or interested in trading the New Zealand dollar. Let's see. Let's talk about gold, something I've been following for some time. It's still below 1,200, and I wrote a column back on, I'll show it to you right now, on January 31st, where I was basically indicating my skepticism of gold and silver's rally. I said, is this gold and silver rally for real? Here's what to watch. And I showed different scenarios, because first and foremost, I'm a technical trader, and if there's technical strength, I'm going to be bullish, and vice versa. So I was showing different scenarios, different key support resistance levels, but I was showing that the smart money in both gold and silver, as indicated by the commercial hedgers in the Commitment of Traders report, and you can see it's the green line right underneath here, I was showing that they were bearish and they had a short position. And that was when gold was at 1283. So now it's around 1198. So you can see the smart money were right again. And you can see the same thing in silver. They were quite short. And I'll show you what silver did. So it dropped since then. So I'm just watching this channel right here. I want to see how this is going to play out, whether it's going to try to break above here and maybe launch a bullish move. But in the meantime, I think there's some downside momentum. I just want to see if it's going to continue following down this channel and bounce back and forth as it heads down, tries to find a solid support. The next major support in silver that I'm seeing is around $15.60. And back to gold, has a similar channel pattern. So the next major support I'm looking at is around 1170, which is the lows that were reached back in December. And if that level cannot hold, then the next level I'm watching is around 1140, which is the lows reached back in early November. So does anyone have any questions for me at all? you can just type it right into the chat bar, and the closing bell will begin in pretty much 10 minutes. So if you have any brief questions, I'll try to answer them, and then Fausto will introduce Mr. Gibby from MetaStock. And so Jeff is going to be showing MetaStock's power tools that'll help you determine your comfort zone for risk versus reward, and basically showing you how you can tweak your strategies using these tools and comparing stop and max profit techniques, focusing your technical analysis education around methods that have worked historically depending on the stocks you want to trade. Also how to use MetaStock to get automated alerts based on the system that you select. And then also how to scour the market very rapidly so you can find only trades that meet your criteria. So definitely worthwhile, and I'll be watching it with interest as I do with all these closing bells, because you always manage to pick up pieces of information with each one that end up contributing to your overall trading knowledge, and then that's how you gain experience and breadth of knowledge. So it doesn't matter how experienced you are, I think there's a lot of value in learning from different market practitioners and experts. All right, so Fausto will be coming on probably about 7-8 minutes, and then Jeffrey will start. So see you then.
Hello, everybody. This is Fausto from Cyber Trading University. Want to do a quick audio check? All right, everybody. Welcome back. Jeff is going to be joining us in about, looks like he's logged in, but we just have people starting to log in now. We're going to start in about 10 minutes. So everyone just stand by, and we will be getting started shortly. Thanks. All right, everybody, I want to do a quick audio check. This is Fausto from Cybertrade University. Can everyone just give me a chat back? Could you hear me loud and clear? All right, good. Let me just do a quick audio check from Jeff. Jeff, could you turn your microphone on? Let's just see if your audio is working okay.
Sure thing, Fausto. How you doing today?
I'm doing good. Thanks, Jeff. Jeff, for being here. Everyone, I just want to do a quick intro for Jeff. I'm going to pass the microphone over to him. Just to guys, let you know, Jeff is probably one of our most longest loyal channel partners that we've been in business with since we started. It's got to be, I can't even count. It's got to be maybe 10 years now. And I know Jeff, over the years, we have great opportunity to meet with him many times. You've probably seen him at the expos all the time. They've got a great group, great staff that works there, and most importantly, why they're there is because they got a great platform. One of the pioneers of their trading platforms that have been out there for a very long time. Everyone always asks me, Fausto, what platform do you use? What platform do you use? They're all good, but they all have very good, great features. And MetaStock, that's why we have them on here, because they are one of the preferred platforms that I always recommend when it comes to trading. So, and you know what, their reputation and their loyalty and being around this long obviously speaks for themselves. So I don't want to take too much time for Jeff. Maybe I'll tell you the joke about the time I did the speaking for them when my wife was pregnant, and I stopped and made sure I did that event for him. He always loves talking about that one. But as another note, let him tell you a little bit more about the platform. So without further ado, Jeff, enjoy the presentation. Everyone enjoy the presentation. Jeff, the stage is all yours.
Thanks, Fausto. I wasn't going to tell that joke, but I definitely enjoy telling that story. So appreciate you having me on here. I will give you, let me go ahead and start showing my screen so it's not all blank for you. You should see a PowerPoint. I'll give you a little bit of background on me. I've worked for MetaStock for my entire adult life since 1994, if you can believe that. That's 18 years coming up in March, and it's a fantastic job. Started in inside sales, talking to people about kind of really what their investment goals are, and now I kind of run the channel programs here. And as such, I've been able to work with some of the smartest traders out there, including Fausto, and really kind of set up distribution networks all over the world. It's been a lot of fun for me. Very much enjoy it. I myself do quite a bit of trading in ETFs and options on ETFs, and hopefully once we have everything released, it's a system that we're going to release for free to the MetaStock database. But as soon as we've kind of have it released, I'll come back in and show you exactly what I'm doing with particularly my diamonds and my diamond trades and that kind of stuff. I do want to kind of underscore that I am not I'm not registered with the CFTC or anything like that, or the SEC, that kind of stuff. So I'm really going to kind of try and keep it educational for you today. If you do have questions, please feel free to let me know. I'm going to try and not tell you to buy Apple. I don't know that it would be a good buy, but I want to kind of just talk a little bit about trading strategies, kind of how we operate and what we do, and I'm even going to teach you a trading rule. So my goal today is to give you enough information about MetaStock that you're going to be willing to take a free trial. And I really believe if you do that, you're going to love it. You're going to keep it, you're going to pay for it, and you'll trade with it. Most of our customers are very, very successful trading, and so let's go ahead and get to the business, shall we? Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators of features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Yeah, I've read that a few times. To give you a little bit of background on us, we were founded in 1982. We are kind of a bit in a unique position because we're actually probably the only company on earth that's allowed to sell Thomson Reuters data and news to individual traders. And we've priced it in such a way that it's much more affordable than some of their institutional solutions. I'm not going to talk a lot about that today, but if you're interested in news, you definitely want to try our real-time program, because Thomson Reuters has spent $1 billion developing out probably one of the coolest news real-time data feeders on the planet, and it's pretty awesome. And we have all kinds of information about that on our website. Today, what I really want to talk about is where is technical trading and using indicators to trade and test and kind of figure out where you're going. If you have questions as we go along, please ask. I'll do my best to kind of stay up with them. We have a pretty large crowd today, so I'll do my best to answer them. If I miss it, ask it again is probably your best strategy. And I will do my best to, I've got my questions all open right here so I can see them. One of the things that we're kind of proud of before we kind of get to the lesson is, again, this year, actually I think it's 24 years in a row, but I'm going to have to go add that up as well. We've been rated actually #1 in our software category for technical analysis by the readers, not the editors, but the readers of Stocks and Commodities magazine, so we're pretty proud of that. Today, really kind of what I want to cover today is I think it's incredibly important that when you're taking the trade and when you're in the line of fire that you trade with a plan. And so we're going to talk a lot about kind of what that is. I'm going to teach you a trading system based around the MACD, which is pretty easy to use, pretty easy to understand, but really more kind of geared towards those of you that are newer to the market to understand what I mean when I say a trading plan or a trading system. And then we're going to use MetaStock to kind of say, okay, well, is that the best way to trade a particular stock, or are there better ways, or how can I focus the education that I have around the market? Because let's face it, there's hundreds and hundreds, if not thousands, of indicators out there. And you could spend most of your adult life learning about the market. What really technology allows you to do is test trading ideas and figure out what works well for you. So I'm going to show you how our tools are going to help you do that. So, oh, the sound is low. Okay. I see one person say the sound is loaded. Is there any, can the rest of you hear me pretty well? I think I have the ability to turn it up just a little bit. Possibly. Actually says it's pretty good. Okay, Yves. Sounds perfect. Sounds good. Okay, Yves, if you could just turn up your speakers a little bit. Hopefully you can get it to a good setting for you. I'm going to move the microphone just a little bit closer to my face as well. I do have a little bit of a cold, so my apologies if you hear it in my voice, but we're going to get through this anyway. So for trading with a plan, we're not going to spend a lot of time on this particular thing, but can anybody tell me who these two people are? It's a quiz for you. Oh, good, Yves. I'm glad that helped for you. I'm going to let you guys go ahead and answer this question. I've got two famous futures traders on the screen. I'm wondering if anybody can tell me who they are. I'm waiting. Yeah, it's this is Richard Dennis and Bill Eckhart. Not Dr. Freud, but a good guess. It's Bill Dennis and Richard Eckhart. If you guys have heard the Turtle Trader story, well, if you haven't heard it, you're about to. But they were basically the people that Penn and Teller's cousins. Absolutely. How did you know, Noah? These are the guys that actually started the Turtle Traders. So if you've heard the Turtle Trader, and it's a methodology that uses a lot of breakouts in trading. And these are famous futures traders. I think it was back in the late 70s, early 80s that did very, very well. And I believe it was Richard was talking to Bill one day, and he was like, you know, we could totally teach people how to trade the exact way we do, with the same rules that we do, and with the same methods that we do. And they would be able to do it just as well as we do. And then Bill said, no, that's not possible. Trading is a inherited skill. You have to have special understanding of risk and tolerance and be able to kind of take the trading decision. And so they started what was probably one of the most famous gentleman's bet around trading that has ever happened. They decided to kind of take some advertisements out in Wall Street Journal, Barron's, and New York Times. And they brought in a bunch of people, and they hired I think it was about 18 or 20 people to actually trade. And they gave them trading accounts, and they said, okay, we're going to spend a couple of months in the end of December teaching you how to trade. And what happened was they weren't successful. They were incredibly successful. They taught all of them the rules. People that wouldn't stick with the rules, they kicked out of the traders and brought somebody else in. But and I forgot to write down exactly the number that they but their annualized returns were great. And Richard Dennis said in an interview with the Wall Street Journal after this whole thing happened, was trading was much more teachable than I ever imagined. In a strange way, it was almost humbling. And in probably one of the best books, actually Richard said, I always said you could publish my trading rules in the newspaper and no one would follow them. The key is consistency and discipline. Almost anyone can make up a list of rules that are 80% as good as what we taught our people. What they couldn't do is give them the confidence to stick to those rules even when they're not making good trades. And that was kind of important with Richard Dennis, because if you know anything about the turtle methodology, it was a breakout system. So with a breakout system, they'd probably lose 8 or 9 times in a row, and then that last trade, the one that actually made money, was the one that made them super profitable for the year. So if you've taken 8 or 9 bad trades in a row, and you don't pull the trigger on the one that makes sense, you don't have the confidence to stick to the rules, then it's not going to work out well for you. You're just going to have your losing trades. So that's really kind of the whole point on here is trading requires a lot of discipline. It also requires the ability to kind of follow the rules once you've tested them and once you understand how well your systems work and all that kind of stuff. A lot of times when I was working on the funds particularly, which I did for a decade, and I talked to traders about how they trade every day, how they were doing, what their goals were. And a lot of them wanted to just learn about rules that would work well. But there's hundreds and hundreds of indicators, so how do we test what's going to work well? I'm going to teach you, the first thing I'm going to do is actually teach you a MACD system. We're going to talk a little bit about that. I'm going to show you how you can use it within MetaStock, and then I'm going to show you how to test these different trading scenarios and these different trading rules to put it into a package that's going to work well for you, something that's going to fit the goals that you have. So again, if you have questions as we go through, let's go ahead and kind of take them as they come. And let's kind of get on to the MACD. So this is the reason I like to talk about this system. It's not the one that I personally use. It's a good one. It works well in a lot of different stocks. And a lot of people really, really like MACD. It's a very popular indicator. And so I always kind of start with this story. It's also one of the most popular videos that we have up on our YouTube channel. So a lot of people like to learn about MACD. And so I'm going to teach you a little bit about what it is. It's funny that I've talked to a lot of traders that don't understand what a MACD is, even though they use it as a signal indicator. So I'm going to show you how that works. I'm going to put it on a chart in MetaStock and kind of show you different ways you can read it. The MACD, for those of you that are new to the MACD, is a trend-following indicator. I'm sure you've heard like the trend is your friend, or a rising tide lifts all boats, or befriend the trend, or whatever kind of cliched saying you want to use there. But what we're going to be looking at is how to measure which direction the market is trending and trading direction with those trends. And MACD is a perfect indicator to measure that particular trend. To calculate the MACD, what you're going to do is you're going to take a 26-period moving average, exponential, and subtract it from a 12-period exponential moving average. So right here, I've got my MetaStock chart here, and pretty soon we're going to switch into the software. But if we were just to take the difference between the blue line and the red line, you're going to have this histogram line. That's all you're looking at. You're basically looking at 2 moving averages and the difference between the 2 moving averages, which kind of makes sense as prices start to separate, as you start to get more into bullish trend, which is what's happening right here. Your MACD is going to get sequentially larger and larger because that shorter term moving average is moving further away from the longer term moving average. So it's a great gauge of trend. As we move down below, the exact opposite is true. If we're in a negative trend or if we're in a bearish trend, as you start to get more of a separation between those lines, you're going to have less congestion, and this is going to become more and more pronounced. And there's a couple of different ways that you can use this. The way that I'm going to kind of focus on for the purpose of today's class is using a simple signal line. And what a signal line is you take the MACD line and you put a 9-period exponential moving average on it. That's it. So and the way people will use that is if the MACD crosses down below the signal line, their anticipation is that our bullish trend is over, as it would be right here, and that things are going to start to become more bearish. Let's go ahead and switch into MetaStock, and I've got a chart open of Apple where we can kind of show how this would work. So we just go ahead and swap into the software. Right now I've just opened up a chart of Apple. I've got my MACD. I'm going to actually change this to a histogram and make it blue real quick, so that you can kind of see the difference of the lines. And what you're going to see is as you kind of get in a tight, congested range, your MACD is going to hover around 0. As you start to kind of go up in price, it's going to go up above 0. And the way somebody would be trading this is if they were using the signal line, is right here when the price is crossed above its signal line, you're going to generate a buy signal on the chart. So if I was looking for this to happen, if I was looking for this as my signal to get into the market, so to speak, this is where I would buy. I'd be looking for this signal to cross up above. When that happens, I'd go ahead and place a buy signal on the chart. So in this particular case, right here is where we get the cross above the signal line. That's where we would buy. And then we would hold on until we get a signal to go the other direction, which hasn't happened in Apple just yet. Eventually it'll happen, but it could go on for quite a while here. Conversely, where the other is true is if the MACD was to cross down below the signal line, which is what it did right here, we would go ahead and take a short position right here on the chart. Okay, actually would have taken it one day earlier, so I'll just put it right there. So that's what a mechanical system is. Basically what we're looking at is we're looking at very, very specific rules for us to go ahead and get into a stock. And because they're mechanical, they're removing the emotion. What we're looking at is, okay, this stock is starting to exhibit a long trend. Let's go ahead and take a long position in this particular stock. And we're not trying to say, well, okay, Apple's releasing, and I'm going to laugh as I say this because I fell into this exact trap with Apple late last year, but they're releasing a brand new product and people are going to love it and the stock's going to go through the roof. That's not what we're looking to do. We're looking to kind of let the price tell us what's happening. In this case, with the MACD, what we're doing is we're very much following the trend. And I also, in MetaStock, to kind of put this buy and sell signals on the chart for me, I'm going to kind of come in here. I'm going to attach what we call an expert advisor to the chart. And what that's going to do is that's going to give us the buy and sell points on the chart. So now I have all of the exact buy-sell points that would be on the chart here. And I can kind of see, and because it's a systematic approach, in other words, I'm not trying to guess, I can visually go in here and say, okay, yeah, this looks like it's been working really good. We would have bought Apple here on 123. We would have held it. We'd still be holding it. We would have bought it at approximately this price. We were going to sell it at approximately this price. So far, we're making money on that trade. And it's something that we can take that particular methodology and we can historically backtest that and say, okay, well, is this the best way we should be trading MACD right now? Again, with MetaStock, you're going to have access to a couple hundred indicators. And when I'd work with traders to kind of figure out what their goal was always very simply, I want to make more money. So in this particular case, or I want to find better entries and exits, or I want to get a little bit more sophisticated about what I'm doing. And so now, you know, you can go in here and you can play with literally hundreds and hundreds of indicators. But myself, I don't really want to do that. I want to understand what works well. So give me a trading strategy like the MACD. Tell me what indicators actually work on the stocks or futures or forex markets that we're interested in. And we do that through a process that we call system tests. Noah asked a question. Please re-identify the underlying blue histogram of the red dotted line. Okay. Let me go through that real quick again because it's pretty simple. If I was to take and I think I can kind of answer your question real quick. I'm just going to find moving average here on my quick list of indicators. I'm going to add a 26-period exponential moving average based on the close, okay? And then I'm going to add another one, and I believe it's 12. I might want to check my notes, but I believe it's 12. It's either, yeah, it's a 12-period exponential moving average. So the histogram, this line right here, is the difference between this moving average and this moving average. So if I took the shorter period moving average here, I took the value of it and subtract it from this particular moving average, I'd get a difference of about $4.64. Okay? Now, so that's just the calculation of the difference. And you notice we'll get a separation of the lines. When we start to kind of get range bound, like we did here for several months towards the beginning of this year, it's going to be a smaller amount because we're more range bound. So, but this is just the difference between this moving average and this moving average. Now, the signal line is if I was to just grab my moving average tool, which I can do, and I put a 9-period moving average on the MACD, I'm going to get the exact same line. So that's just a moving average of that difference. And people will call it the signal line because when it crosses down there, that's when you're going to get your buy or sell signal. Now this is just one of the I hope that answered your question, Noah. If not, ask it again. Okay. Now, that's one of the ways people can actually identify and use the MACD as a trading system, and it's actually one that we like to show at trade shows because it works really, really well on a lot of different instruments. It may not be the best one that's suited for Apple. And if I wanted to learn more about this MACD system and kind of figure out a little bit more about what feeds into that, I can come in here and I can actually open up an expert commentary. And the expert commentary is actually going to tell us, okay, currently the MACD is bullish. This is because it's trading above its signal line. So as long as it's above its signal line, you're going to consider the trend as bullish. We can come down here and tell us, okay, the MACD is in an overbought range. Some people will look this as an overbought, oversold indicator. And what that's telling us is I wouldn't buy Apple now because once it kind of starts to get really, really high, as it did back here, you kind of come across as a reversal time. In other words, this move on Apple may have happened already. We may be too late for this particular trade. It's showing overbought, which means we're likely to have a correction, and there's been no divergence. So this will help you interpret the system that you're looking at. You'll notice when I opened up that commentary window, we had a bit of a triangle that showed up here, and I can move that around on the chart so I could put it on this MACD signal, and it would actually tell us a little bit about that buy signal and say, okay, currently the MACD just crossed its bullish line. This is a buy signal. Divergence is actually a very good question, and I don't actually Dr. Alexander Elder calls it one of the most important signals in technical analysis of MACD divergent system. That would be if we saw that and this is certainly not the case with Apple. If I was to take a couple of parallel lines here, if I was to draw a line kind of on this MACD line, and if I was to draw a line right here in the same area on price, you'll see that they're moving kind of in the same direction. Okay? They're not divergent, they're convergent. Once in a while what will happen is you'll see MACD starting to go up while the price isn't going up, and that's a divergent signal. And that's something that we can point out to you, and that's a signal that something's wrong. And it is an entry signal that you can use. Not one that I'm talking about today, but one you can definitely use, actually. Thanks for the question. I hope that kind of helped you. In this particular case, these wouldn't be divergence, and it's actually telling us that there's no divergence. First half of, okay. Well, I'm glad I'm 50% good so far. No, half of the explanation was fine. I did not get how one uses what I thought the interaction was between the signal line and the histogram. Okay, so somebody that's trading this as a signal generation, you'll notice right here we have a cross of our MACD and our signal line, and we generate on that particular line a buy signal. So somebody that's using the MACD and its signal line, they're using the signal line as a signaling mechanism. So in other words, if we start to get more bullish, the MACD is going to start to go higher, and the signal line is going to cross up above its signal line. And that's what's painting this buy signal in the chart. That's one of the ways you can use MACD. And that's the way we're going to test it. So in this particular case, we're not looking at overbought, oversold. We're not looking at divergence. What we're going to be looking at is primarily the crossover of the MACD and its signal line to generate the signals and give us. That's what we're going to test. We certainly could test other like divergence and cross and overbought, oversold, but really kind of what I wanted to do is to give you an idea of what an indicator was and how a trading system actually works, so that you could kind of understand what we're doing when we go and kind of say, okay, let's test this and see how well it works on Apple. And we'll compare it to the other systems that are available in the program. And this comes back to a lot of the points that we have with people that, especially when I'd be talking to traders on the phone, which would be like, okay, yeah, I'd kind of get into a spiel and I'd be like, hey, there's 200 indicators that are available in here. And you can come in here and they have a lot of systems. It'll explain them to you. It'll explain everything to you. And we'd get to a point in the call very early on in my career where people would be like, it sounds like I need to know a lot more to be able to use MetaStock. I maybe know what 5 indicators are. And really, I don't necessarily, as a trader, want to understand 200 different indicators. I'm happy knowing well what works and what works well in the marketplace. And so what we do around that, what we can help you with that is we can provide MetaStock a stock. Here's a stock that we want to be able to test. Let's go back and we'll take all of the buy and sell signals for Apple. And you can do this on any stock that you want. You can even do it on the whole market if you want, which I won't do because it takes a little bit of time. But tell me, if I took every single buy signal that this MACD generates, tell me what indicators or what system works best, and we call that system testing. So I'm going to go ahead and click on this $sign. This is our system tester for MetaStock. And what I'm going to do is I've selected quite a few. I've pre-selected quite a few of the systems that are in MetaStock. I selected these based on the following criteria. Number one, they're going to be included with your MetaStock. So when you open the box, you can see them. I've written a lot of stuff over the years, over 20 years. I've written a lot of my own systems. So I wanted to make sure we were testing stuff that is in the program, for one. And number two, what I wanted to be able to do is I wanted to have it run in a fairly fast way. So I took out any systems that I knew involved optimization of variables, which you can do in MetaStock. You can go in and say, well, okay, test all of these different values and tell me what works best. And it works really well at kind of giving you the best moving average to use, for example. But it takes a lot of time because you're testing a 5-period moving average and a 6-period and a 7-period. So I've taken those out. And what we have left is probably around maybe 30 or 40 different systems that I've just kind of picked from the list here. So these are the different systems that we're going to test. And I've got in here MACD, the expert system. I took out the one with optimization. So we're just going to test the MACD one. And what I'm going to say is, okay, based on these particular trading rules, tell me what works best on Apple. So I'm going to just go ahead and type in Apple up here. And I'm going to go ahead and say, okay. Now we're going to go back. Actually, I started that a little early. Let me go ahead and cancel this, and I'll show you what I'll kind of go into a little bit more detail about what we're doing. I'm going to take about 2 years of Apple history. Now with Reuters, I could go back into the 1980s if I wanted to. I'm going to test them on a daily basis, and I'm going to take all of the long trades, all the trades that are going to bet that the stock is going to go up, and all of the short trades. So we'll test long and short trades. Okay, I'm going to do this on a daily basis. You could change that to whatever increment you want here. And I'm going to say, okay, well, every time you get a buy and sell signal, we're going to start with a hypothetical trading account. In this case, I'm going to start with $10,000. And every time you get a trade, I'm going to have you manage that trade either by buying 75 shares, or I could say I want to trade $7,500 regardless of whether or not I have it at the time. Or I can do a percentage of available equity. And in percentage of available equity is what I'm going to do. What percentage of available equity is going to do is I'm going to start with $10,000. So the very first trade I get with the systems is going to take 75% of that trading account, and it's going to buy shares based on that amount. So in that case, our first position for Apple would be approximately $7,500. Now, as we grow that account, as it gets bigger, it's going to trade more. so that we can leverage the more equity that we have. The same is true if we have less money. It's going to actually trade lower amounts because it doesn't have as much money as you can trade. And I like to do that. You can play with the other methods like the number of available number of units and just trade the same amount of shares every time if you like, whatever you want to do. But I'm going to do a percentage of available equity. Now, it does cost money to trade, so I've put in a commission that I'll pay to the broker of about $5 every time I get in, $5 every time I get out. Okay? And then for trade execution, if you've watched MACD and maybe have a product like MetaStock before, you might get a MACD at about 12 o'clock and then the price runs the other way and that MACD signal goes away. And that happens because the MACD is based on the close price. So what this will do is basically what realistic market prices is going to do is it's going to wait until the close of your bar. And then since you can't really buy on a closed trading session, I guess you could go in and get it after hours or things like that. But what this is going to do is it's going to basically wait until the beginning of the next trading bar. So in this particular case, it'll get the MACD buy signal. If it got one today, it would place an order to get into that particular stock, in this case Apple, tomorrow. So hopefully that makes sense for you. You can't take that off and make it unrealistic market prices. You could say, well, I'm going to go in and check it at 1:45 Mountain Time, which is about 15 minutes before market close. And in that case, I'm going to go ahead and exit on the close and enter in the close. In that case, you just take this out and just say, okay, I want to buy on the close and sell on the close. And that's a way you could kind of test. The important thing is to kind of try and match it up to the commissions that you're paying and, try and make it as realistic as possible, because garbage in, garbage out, what we want is we want an accurate assessment of how well these indicators work. Cool? Okay. I'm going to go ahead and select realistic market prices again. I'm going to go ahead and click OK. And now I'll start my system test, now that I've kind of explained fully what I'm doing here. Okay? So now it's, let me cancel that again. that was testing a whole marketplace. We would have been here entertaining you for quite some time. I'm just going to test Apple. And you can actually test this against all of the optional stocks, for example. And that's very, very cool if you want to, in fact, I'd recommend it because it allows you to kind of figure out what works really well and the systems that works really well for. So in other words, if we knew out of the optionable, I'm going to go ahead and start this test. If we know that out of all of the optionable stocks, MACD worked best and it worked best on Apple and IBM and whatever, then we can kind of really get to something that works. Ron says, I'd want to check the pre-market before entering. That's a good question. You could definitely do that. I actually, now that I've been trading about I'd say 8 or 9 months ago, one of the buddies that I work with, his name's Logan, talked me into doing options instead of stocks. And I check pre-markets every day, every freaking day, because it's very, very, it's a lot funner on options, I will say that. Let me go ahead and click on View Results here, and I'll just kind of show you what we're looking at. So here, if we wanted to kind of take a look at this, I'm going to sort it. Obviously, if we have a green line, these are indicators or trading systems that worked really, really well with Apple. Okay, and the red lines are obviously ones that didn't work. They didn't make money. So, and depending on how far we are from how big our line is, that's going to tell us how well it did or did not work. MACD, just because I just taught you that system, actually over the last 2 years would have lost money on Apple. So don't use it on Apple. MACD is a great system, but it also depends on the stock that you're looking at. And this kind of comes back to let's focus on the indicators that work on the stocks that you're interested in. Actually, in this particular case, MACD would have lost about 13% in 2 years, trading 54 times. So let's focus on something that works. I'm going to go ahead and sort this column here based on the net profit of the particular stock. So in this particular case, for the last 2 years, our best performing indicators would have been a system in here called the Stochastic 2080, with optimization. I meant to take the optimization out of here. I'm surprised it worked really, really well. I'm going to go ahead and kind of actually go down to this one that didn't use optimization. It's called the stochastic oscillator. Okay, and if we would have traded all the buy and sell rules off of that particular stock on Apple, that particular stock being Apple, over the last 2 years we would have been up about 50%. Okay, with our best trade being with this one, it only traded one time in the whole year, in the whole 2-year period. So with that one, I'm going to kind of kick that one out because one time isn't enough to really kind of give you an idea of what's working well. It has to do a little bit with statistics, but if it's only traded once, I'd want to go back and test a longer test period. So I'm going to throw that one out too. I'm throwing these two out, even though they performed well, they used optimization. So, and I meant to not select them. Our next performing system was momentum indicators. So, and this one has an expert system with it. Over the last 2 years, if we would have traded all the buy-sell signals off that particular system, we'd be up 50%. Now, here's where it kind of comes into finding something that works well for you, because over 2 years, taking every single buy and sell signal, that would have traded 75 times. So from a quick bit of math, if I divide that by 2 years, that's about 36 times. If I divide that by 12, that's about 3 or 4 times a month, which is fairly active. And that might be something that works really well for you, and that might be something that you want to learn a little bit more about. But in my particular case, I work probably about 60 hours a week and have 3 kids that sometimes feel like 6 kids, if you know what I'm saying. So in that particular case, that's a little bit too frequently for how much I would want to trade. I'd probably keep looking a little bit more at maybe this RSI system again with optimization. I thought I had selected all of those out. But here we've got, I'm just going to kind of filter them based on the trades and find something that doesn't use the CCI crossover worked pretty well. It traded about 15 times a year, which is okay. So and now I want to kind of take a look, and anytime I find something that I like, again I call this trading the right system for you, or finding the right system for you, because you can match it to how often you want to trade. But 30 times every couple of years, 30 times over 2 years, it's not too bad. It's actually probably what I averaged out in my taxes for last year. I think I traded about that much last year. So in that particular case, we had 18 winners, 11 losers, a 30% gain, and our average dollar gain versus our average dollar loss is about 9. So then we can kind of drill into the reports to see really what works well. And in that particular case, what I'm going to do is I'm going to go into this CCI system. Linda says, what does the momentum indicator look like in MetaStock? I'll show you, Linda. It's going to take me way too far from where I'm going right now, but when we get back into the stock and start to look at the expert advisor, I'll show you how that expert works, okay? Looking at lower price stocks from $5 to $30 range would mean most of us could trade enough shares to make good money. Can we look at stocks in that range? Absolutely. You can. And with MetaStock, you could actually say, I want to build a list of stocks between $5 and $30, and it's a scan that I could build in a couple seconds for you. So you could absolutely test. You could say, okay, here, run a scan, show me all the stocks that are between $5 and $30, and perform this same system test that we just did, Ron, on just those stocks to see really what works well in that price range and what stocks of those stocks perform best in that price range. Hopefully that made sense. I'm hoping it made sense. I'm trying to make sense for it. So this one uses a CCI crossover system. If I click on View, you'll notice I can click on View on any of these reports, but it's going to bring me to a full summary report. So it's going to tell us, okay, in that particular case, over 2 years, we made about 28% on this system. That's about a 14% return. Our total trades would have been about 30. 18 of those, 29 to be precise, 18 would have been profitable and 11 would have lost money. Okay, so again, what I'm trying to find is something that works well for me, as well as has it better than zero batting average. So in other words, I want to win more than I lose. For me, I just know as a trader I'm going to be more comfortable finding something that is a little bit more consistent. I don't necessarily want to take 8 trading losses in a row so I can make money, even though I might make money still. So in this particular case, we have more winners than losers. In fact, our most consecutive winning trades on this particular system with Apple would have been 5 in a row. Unprofitable trades would have been 2, 11, 4 of them betting the stock was going to go up and it didn't, 7 betting it would go down and it didn't. And our most consecutive losers was 2 in a row. So in that particular case, I'm not losing very many times in a row. In this particular 2-year scenario, we lost 2 times in a row. So again, it's kind of understanding what feeds into this report and being comfortable with it. Our profit loss index goes from plus 100 to minus 100. It's at 32. That's pretty good. Our risk versus our reward, our wins versus our loss is 90%, which is really good. I'm assuming if we look at, and there's some other things that are on here, if you have questions on these during your trial or you want to kind of understand how some of these are calculated, just click on Help, and it's going to tell you what every metrics is and how it works. And Help's a very, very cool feature in MetaStock. It's going to really help. I didn't mean to say it that way. The one thing I do like to look at is the equity tab. I'll notice that, like in the last couple of months, it's not worked really well. I do like to, quite frankly, see a little bit more consistency in this equity graph, but this will work for what we want to show you, and that's how to kind of look at what the rules are. Obviously, if this is your hypothetical account, it's a lot different than if it's your real account, right? But as a hypothetical account, once it turns it into my real account, I don't want to see huge gaps up and huge gaps down, and I don't want to see a lot of inconsistency in the results. I want to see something that's fairly reliable. And that's what you'd be looking for. Obviously, you're never going to have this straight 45-degree angle, but you want to see that you're making money over time and that you'd be comfortable from going from $14,000 back to $13,000 in a trade. And as long as you're comfortable with that, again, it's about finding what works for you and combining the indicators together that work for you. At a later time when we do another seminar, I'll show you exactly the system I use, which is pretty cool. I'm just waiting for it to get released to you guys for free. So let me go ahead and close this out. And let's go back to Apple. That system that we were looking at was the CCI system. Okay. And I can come back into that expert advisor here, this guy in the top hat, and I'm going to have that CCI system. Now, I don't remember if it was a PS or I think it was PSCCI. Here it is. And now I can attach, instead of attaching the MACD to this particular, I can attach this CCI system. I can go ahead and click on Close. And it's going to then start painting the new buy and sell signals on the chart for me. In this particular case, we remember that huge drawdown that we had in equity. That's because this particular system would have given us a short back here in November. So that's why we've been in a losing trade since November. But if we go back, we should be able to see exactly what other trades that we've got, and then we'll also get trading rules that are kind of delivered to us on how to look at it. So the CCI was developed by Donald Lambert. It was introduced in the October 1980 issues of Stocks and Commodities magazine. The author suggests using CCI as an indicator, overbought, oversold indicator, with 100 being overbought and 100 being oversold. The system is based upon further analysis that determines that plus or minus 200 produces a more significant reversal signal. So this one is using a 200 CCI. It also says, while this is very good at capturing profits, on the majority of trades, no real protection mechanism has been put into place. That's why we're losing our shirt right now. Stop-loss orders should be used to prevent the few failing trades from removing all of the acquired profits. Okay? Now, I would make the argument that if you're going to start using this with Apple, and it's worked really well over the last 2 years with Apple, but you're going to implement it with a stop, that you test that stop. So if I come back into the system tester here, and I'm just going to find that CCI commodity channel, and I'm going to right-click on that system and go to Edit. And I can come over here to stops, and here I can put in a trailing stop easily. I just click on longs and shorts, and I say, okay, I want you to wait 3 periods, and then I want you to risk 10% of my profit. And that'll actually test it. That's all I have to do. I can then go ahead and rerun CCI to see what works well, or see how that impacts my equity. That's all I have to do. And a lot of times, you know how it works with stop losses. You put it too close, and it wicks you out, and then it finally goes the direction that you wanted, but you're out of the market because you hit your stop loss, and you end up losing your profitable trades. Or you put it too far away, and you lose too much money every time you trade. So when you test a trailing stop, what you want to be able to do is actually come in here and say, here's how much I want to risk. I want to risk either 10 points of my profit or 10% of my profit. And there's other ones that you can just as easily add while you're doing it. I'm going to take them out right now. But you could do longs and shorts. You could do a profit target. You could do a maximum loss. And you could even do a break even. You could even say, well, if this isn't going anywhere, I want to get out of it so my money's not tied up. And if it hasn't changed enough, you could say, okay, if it doesn't change at least 5% over the days. And you just select the ones you want. It's an incredibly easy tool to figure out what systems or what indicators you should be using to get into the market, and then to help tweak that so that it's still profitable but is as profitable as possible. Okay, let's see here. Going back to your question, Linda, I'm a man of my word. You wanted to see what the momentum indicator looked like for MetaStock. So let's go ahead and attach the momentum. Actually, the momentum indicator uses quite a few different momentum indicators to kind of give you a buy or sell recommendation. So if I was to click on the expert advisor, it's going to be under momentum indicators. So if I go ahead and find that on the list, I'll attach that to my chart. I'll go ahead and click on close. Then I'm going to be able to see all of the different momentum indicators and what they're saying. In this case, you'll notice CCI. They're combining CCI, MACD, stochastics, and RSIs. So on any particular given day, we just got a sell signal on CCI. And we can come down here, and it's just going to tell us, okay, the stochastic, one method of interpreting the stochastic is to look for overbought, oversold areas. The stochastic is 94. This is an overbought reading. And then it'll go through, and it'll tell you about the relative strength. The relative strength shows overbought above 70. Currently, the RSI is here. And then so on and so on and so on. So it's actually combining, it's not just one momentum indicator, it's combining quite a few of them for you. Can I see what a stock-like area would show for useful indicators? Ron, we'll do a test on area. I think we have enough time. There's one other thing that I want to show you real quick. And a lot of times I'll actually come in. This is the first time I've taught this class this year, so I wanted to stay with something that I was a little prepared with Apple, but I'll run a test on area. We can look at how that looks for you. One thing that I want to show you first is if we come back to that CCI system, and again, this comes back to scanning. This comes back to the question that we had before. Can we look at stocks that are lower priced from $5 to $30? You would run a scan for something like that, so you could build that list out. But if I come back to the CCI system, I forgot what I was doing for a second. Oh yeah, it was down here. CCI. I'll attach us to the chart. I'll click on close. We would have had this sell signal here. These are signals I put on the chart while I was explaining MACD. This is a line that I put on the chart while we were talking about divergence. But right here is the last time we would have had a sell signal. And technically I wouldn't want to even take that sell signal now because it's kind of expired. It's from November. Even if it was working out well, we might have missed a signal, so to speak. If you find systems that you like in MetaStock and you want to find opportunities to trade, the last power tool I want to show you is our scanner. So I can click on the Explorer here, and let's say we really did like MACDs, or we really liked one of the systems that were in here. What we're going to have is we're going to have a matching exploration for that. And so if I come down here and I find, well, we'll just do MACD because you guys get the point. I'm going to look for a MACD buy signal. And what I'm going to say is I want you to look at in this case, all of the U.S. optionable stocks. I just select this optionable stocks list right here. There's about 4,300 of them. I'm going to go ahead and start that as a scan. And what MetaStock is now going to do for you, since we're not going to wait another 3 months to find a good trading opportunity today, is it's going to go through and it's going to tell us if there's anything that has a current MACD buy signal for us. So if you find something that you really, really like and you really, really want to trade, this will save you the process of looking at about 4,300 different charts. It'll just tell you the ones that currently have a buy signal. And Ron, in your case, what you would do is you'd go in there and say, I want stocks that are closed above $5 and closed it below $30. And if you want to do the trial, I'll send you exactly how to plug that scan in so that you can build that watch list out and have exactly what you're looking for. Cool. Okay. Now let's test area. So I'm going to go ahead and cancel this. As you notice, it's about 98%. It's about 25% done. It runs a lot faster when I'm not sharing the screen, but it's projected about 99 out of 100, 98 out of 100. So we're obviously saving a lot of time to just look at the ones we're interested in. I'm going to go ahead and cancel it, though. It brings up a nice little report. Report looks like this, just lists out the stocks that currently have buys. You can then save that to a list and kind of go through them to figure out the one that you like best. Very, very cool tool. Saves a lot of time. Area, system test on area, and I'm going to check the time real quick. About 10 minutes. Okay, so what we're going to do here is I'm going to come back to the system test here, and I'm going to test area real quick. So I'm not sure the symbol for area, but I'm assuming it's pretty much area. Now with Reuters, with our Reuters data, we have a lot of different exchanges that we cover. So usually what I do, if I don't know, what I want is the US one, which is area.o. So I'm going to go ahead and select that one, and I'm going to go ahead and start the system test, and we'll go ahead and see what that looks like for you, Ron. And that quickly it's done. Well, okay, it's not quite done yet. I'm getting ahead of myself. Let me drink a little bit of my coffee, and then it'll be done. The other thing that you could do, thanks, Ron. The other thing you could do, Ron, is actually run that little filter scan, make your list of all of the stocks between $5 and $30, and you could run this same test on all of them. It's a very, very cool tool. In this particular example, though, the RSI is the best indicator to use, followed by the PS projection oscillator. And without going, ooh, wow, that's a lot of trades, I'd probably reject that based on the number of trades. The next one is the relative strength index expert system. I just want to make sure it, so in that particular case, I could go ahead and open that chart up. I could plot that on the chart. I could, of course, look at the reports. And then I go in and, again, instead of learning about 200 indicators, RSI seems to perform really well on that particular stock, so that's the one I would be looking at. Cool. Okay. Hopefully that's helpful for you guys. Let's go ahead and just talk about, again, when I started, I said my goal was to kind of just get you interested enough in MetaStock because it's a very cool tool. We've covered a little bit of what it can do, but it's been rated #1 in its price category now 24 years in a row. That's a long time. That's even longer than I've worked for the company. So, and then in addition to that, one of the things that we ask is we ask our customers every year how well they're doing, and I think last year it was like 84% said they're more successful in the market because they use our product, which is really good odds. We're working on the other 16%, but I would take those in Vegas every day. So I just want you to try it. Going to let you try it for free. Arbo's a great system in MetaStock. Let's go ahead and kind of skip to exactly what the offer is. We have two versions of MetaStock. We have a MetaStock Daily Charts version, and this updates hourly during the day for you, so if you do want to see what's going on in the marketplace, you can. It's $59 per month, and that includes all of the data from Reuters that you need to use it, and we give you basically a free trial to go ahead and install it. We have the MetaStock Real Time. The price on that is normally $250. That comes with all of the institutional news as well as MetaStock, so there's a lot of stuff that we didn't talk about. There's even a lot of stuff in MetaStock we didn't talk about, but I'll try and kind of just show you some of the power tools, some of the stuff that we can do. if you do the free trial, I'm also going to give you a bonus. I want you to know it. I want you to understand how to use it. It's a toolbox. There's tons and tons of tools in there, and if you don't know how to use a screwdriver isn't going to be helpful. So I'm going to include our newest training CD called the, it's not a CD, it's all online delivery. It's called Unleash the Power of MetaStock, and they normally charge about $99 for it. I'm going to give it to you for free with your free trial. So if you want to take me up on that, go ahead and visit us at metastock.com/CTU. If you have specific questions like, can I do this, you're welcome to give one of our guys a call at 800-882-3040. You can email either my sales guys. My sales guys are awesome. They're very well informed about the program. Not nearly as informed as I am on the program, but they can definitely answer any questions that you most likely have. You're welcome to email me as well at jeffrey.gibby@metastock.com. Try it out. You're going to like it. I wouldn't trade without it. Okay, Ron. Get online and just get set up for it. It's an automatic subscription is what you'll be signing up for. And if you have any questions, feel free to reach out to me during your trial period, Ron. If you do a lot of ETF investing, drop me a message, Ron, and when we release the system that I really like around Dow and sector ETFs, I'll send you some information and the install link for it. It's what I've been using with my ETFs since we started to create it back in June or July of last year. It's really, really cool. Okay. All right, guys, that's it from me. I really appreciate. I want to say thanks for spending an hour with me. I hope it was worthwhile for you. Do the trial. That will be worthwhile for you. And I want to also thank Fausto for having me in here. Actually, just to kind of get back to your question, MetaStock Daily. Now, there are ways to do this that bring down your monthly cost. The reason I do the subscription version of MetaStock is obviously I can give that to you for free, and if you don't like it, you can just turn it off, and you're not on the hook for anything. So that's $59 per month for the daily charts version and $250 for the real-time version. You can pull that monthly cost down to about $25 a month if you like MetaStock and buy it. And you can also pull the real-time data down to about $150 a month if you like it and buy it. And our sales guys can kind of walk you through what the options are after the trial. I would recommend you call and talk to them a little bit about what the pricing is and what the options are so they can help you figure out what works best based on the markets you want to follow. I think this was recorded, but I didn't record it. So if it wasn't, just drop me an email. I've recorded this one several times. Okay. It says it's going to be recorded, so I'm sure that Cyber Trading University will send that out to you. You can also go up to the website there, metastock.com/CTU. There's a lot of little videos that kind of talk a little bit about the different power tools. We talked about like the Expert Advisor, which is the one that explains all the rules to you. The System Tester, which actually is the one that allows you to test the trading ideas, and the Scanner. There's one other power tool that's really cool. It's called the Forecaster. And I did a class on that a couple weeks ago, and somebody sent me an email that it's the most phenomenal looking software they've ever seen. We didn't cover it today because I really kind of wanted to keep it more around kind of the systems trading idea. But if you go up to the metastock.com/CTU page, you'll see some videos that are kind of 10 or 15 minutes in length that just talk about the different power tools and what they do. Awesome. Thank you, guys. I'm going to go ahead and check out, and I appreciate everybody coming today.